time for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades, Don Kaufman of Theo Trade. Good to see you both. Don, how are you feeling about the markets?
Well, I mean, the bifurcation kind of continues. Look, it's been all about buying tech and basically selling most everything else inside of the S&P 500. If you saw some of the statistics, it's some of the worst advanced decline lines we've ever seen. This is actually the worst on record since 1996. It's 12 consecutive sessions with a negative advanced decline line inside of the S&P 500.
Wow, I just wrote that down. I didn't actually even realize that. I was also impressed to hear, for example, Boeing was a winner, one of the best on the Dow Jones Industrial Average. That's not tech, one of the outliers and one of the better performers. But I think you're right. It's been by a lot of tech, no doubt. Let's get to Exxon at 108 today. Why are you talking about this one, Don?
Yeah, so Exxon Mobil right now is just in wildly oversold conditions. Now, before Rick in a moment totally crucifies me on this particular front, look, this is just a trade. I am looking for a short-term bounce back to the upside. Exxon Mobil just getting annihilated here in the near term. I think this really comes down to that this was a bit of a, buy the rumor, kind of sell the news around the election, and they're selling it right now. So I'm actually going to look to the other side of this. I'm going to take a bullish trade. Again, I'm going to take a bullish trade specific to Exxon Mobil, looking for the bounce. I'm just going to go out to the January 10th expiration. I'm going to be buying the 108 calls, selling the 110 calls, $2 wide spread. This one's done for a 98-cent debit. It's literally like risk a buck to be able to make a buck on the idea that there's going to be a bounce in the very near term.
All right, let's see what Rick has to say about the charts today. Rick?
Well, Don, I actually kind of think I might surprise you here, because that seems like a pretty interesting point to choose. I had the same point, that 108 level on my chart here. Why did I have that? Well, because it was a low point right here. It was kind of a short decline during this big rally. Low point, and it's about where we had our low point before our breakdown. That's where we managed to close yesterday. That's where we're pushing above today. So 108 seems like a pretty darn important level to me, just as I look at this right now here. We can see, though, it has been a severe decline. You can see that we had a moderately sloping trend line down across our 52-week highs there that has progressed into a very sharply sloping downward white trend line there. It's taken us below all of our moving averages. They're all diverging. The faster ones are starting to outpace the slower ones. So in the broader sense, the trend is not looking particularly good here. But that does not mean at all that you can't get a short-term bounce when something is oversold. And we are oversold. We're quite low. We are actually around 25 or so on the RSI. RSI only goes from 0 to 100, so that's a pretty low reading. But we are invalidating a downward sloping trend line on the RSI. So maybe if we start pushing above this price trend line as well, we could get some kind of a breakout here in the shorter term. But when we look at volume profile, we can see, once again, this area where we are now has a little extra importance. It lines up with the volume node. It lines up with our -2 standard deviation channel. So another potential source of support there. Below that, we've got a big node near like 102. If we were to move to the upside, we've got our +1 channel matching up with an old low right there, and another heavy volume node near like 115. And if we were to overlay our moving averages on everything as well, we can see that also it matches up with our 252-day EMA and our yellow 21-day EMA roughly. So like 114 to 115 seems important to the upside, Nicole.
Yeah, we're watching. I mean, look, when you see oil at $71, it was below the 70 mark. Now it's making this comeback. I mean, a lot of folks are saying what's going to happen in 2025. You have a new administration. Maybe things will change. Is it drill, baby, drill, or is it stand back? Don, final thoughts.
Yeah, that's exactly what I was looking at. The drill, baby, drill. It was buy on that rumor, and then they just basically sold into the news over here. Look, one of the other reasons I'm going along into to Exxon Mobil here, looking for the bounces. I think we need to buy Dow. Anything inside of the Dow, anything anywhere near the Dow, they're going to be buying Dow, and we're going to turn around and like sell some tech. Maybe some Boeing along with it. And by the way, Boeing, I think it's still down 30-something% a year-to-date basis. So it has come back. It was down about 50%, but Boeing's still down quite dramatically on the year. But again, this is much more buy Dow and sell tech. That's why I'm actually long Exxon Mobil.
All right. Next up, I love that you brought up the easy for me to say, Jets ETF. And so when I think about all these airlines, I love seeing how well they've been doing lately. I love seeing the guidance that they are giving out, which has been very positive. Bookings for the holidays have been really nice too. Some of your thoughts on what's going on here?
Yeah, but have you flown recently? Like again, every time I fly, I tell you, I lose a little bit more faith in humanity. I really do. It's been that bad flying lately. So in Jets, I am going to take a short position, and this one is not just in the short duration. I'm taking a much more significant short position because Jets, this ETF has actually run from 16 to 26. It's up 35% year to date. And I got to tell you, any chance that I can get to short the airlines, I kind of want to do it. And in this case, I didn't want to short any individual airline. I wanted to short them all because most of the charts look very, very similar, whether it's United Airlines, whether it's American out there. And yeah, I fly extraordinarily often. This trade is bearish. It's March 21st expiration. I'm going to buy the 25 puts. I'm going to sell the 20 puts. So it's $5 wide put spread. I'm buying this for $1.25. So I'm also, again, giving myself ample time, like 90 days for the pullback to actually ensue inside of the airline sector.
Yeah. Look, I couldn't agree with you more. It does feel it's so anxiety ridden just to get to the airport and get on a plane. I couldn't agree more. One day I'll get on that plane and go to St. Croix, one of my favorite places, Don. Rick?
Yeah,
Your thoughts?
Yeah, it's a pretty nice chart. Recently here, we did hit a low point near about 1648 all the way here, but that was kind of the genesis point for our very sharp upward channel here. August 5th, a key day for so many companies, a day of severe trouble with Japanese stock market, kind of caused a big swoon to the downside here. But those points where things are kind of abnormally low can often result in fierce rallies. And it wasn't the cleanest trend here. We can see we had some notable upside excursions there. This is kind of just the best I can kind of describe what's been happening. A pretty consistent, pretty sharp rally. Now, however, it looks like maybe we're losing a little bit of steam though, because you can see we had our high point on the RSI here, and we've been kind of gradually moving lower and lower even as we continue to make new closing highs. This tells us the pace of the gains is slowing down. It doesn't necessarily foretell a big collapse or anything like that. It's just saying like maybe we're at a point where we're taking a breather, maybe we're consolidating a little bit. However, I can't help but notice we are breaking below our green trend line on the RSI there. So we're kind of dipping below a key area as we test this trend line that also happens to be near our old set of highs, our green line, and our yellow 21-day EMA. This is the 25 area that Don was talking about. Once again, kind of the same key area that I'm noticing as well here. And if we were to look at our volume profile study here, we can see there's kind of some little pockets right here. Not really anything notable in the near term, but maybe around 2450 is a noteworthy area. That's also, you can see, once we start getting below 25, we've got our standard deviation channel, our +1, and another set of highs and lows near like 24. So kind of that range could be a supportive area to watch. And then all the way down, 20 was about Don's other strike price. That's our -1 standard deviation channel and a big volume node right there. So if you're going to pick a point for some consolidation to the downside, that's a candidate that seems reasonable based on some of our technical data here. Also lines up pretty closely with our purple 252-day exponential moving average.
All right, thank you for that. All right, Don, give you the final call there on the Jets, and then we'll get to the bond ETF, please.
Yeah, in a differentiating look at this, I'm actually looking for quite a vicious pullback inside of Jets in the not too distant future over here. A nice pullback specifically in this entire sector. As I said, it is way overbought territory right now. That pullback could be imminent. Maybe we're seeing a little bit of a stall right now in that marketplace, but anticipate again some sell side, possibly with oil also coming back up.
All right, last but not least, we look at the TLT. Your thoughts?
All right, so this one I had to go against a little bit of instincts over here. So, well, what occurs many of the Fed meetings is what I term double down dove Jerome Powell. And that basically means is his stance is usually extraordinarily soft. He doesn't want to do anything to royal markets, and especially into the end of the year over here. So, and a new administration coming in. At this point in time, in terms of interest rate policy, as I said, I think they're actually going to go a little bit dovish on there, which, as I said, it's against my instinct. My instincts say, like, look, you should probably look at even raising rates. If not, this is the end of the cutting cycle. But I don't think that's the guidance he's actually going to provide. And I think the bonds are actually going to react by rallying. So in this case, I'm going out to the January 17th. Again, TLT, January 17th expiration. I'm going to be buying the 90 calls. I'm going to be selling the 95 calls. This one's done for $1.40 debit. Bullish in the near term here on the TLT. As I said, we go double down, Dove, Powell.
All right. I like that. I feel like I'm watching a sports report. Rick, final thoughts.
Sure, you know, and an interesting chart, kind of heavily dependent on all the Fed stuff, obviously here. So maybe a little bit of a different kind of situation than a conventional stock here, but we can see, you know, kind of a downtrend. So we hit that high point near 101.64. We had a big slide. We kind of held our ground near about 89.40 or so. That looked to me like an important point, one of these key stopping points, a point where price kind of repeatedly ends up over and over again here. It wound up holding true this time as well here, but we're kind of in danger once again. We're getting close. We had a rejection at our purple 252-day EMA. That also gives us our white trend line to keep in mind going forward here. RSI bearish, you know, trending downward, making not quite a new low or anything yet here, kind of behaving as you would expect in the shorter term here, but, you know, definitely more geared toward the downside here. As we look at our volume profile study and our standard deviation channels, we can see that, well, we are a little bit below our -1 channel. We are kind of in the thick of this volume node area near about 90 here. If we get another leg lower, look for potential consolidation at this other volume node, maybe 88.50. -2 channel could provide another support area. Roughly lines up with our 52-week lows. So around 87.50 or so would be an area to watch as well. To the upside, we've got this point, linear regression line, volume profile, point of control, and our downward sloping trend line all coming together near about 94. So that could be a breakout point. But ultimately, to me, 96. That was a notable gap. That was a high point. We never really even came close there. So that would be the point where I would start being like, oh, hey, I think the overall trend is starting to perhaps change.
All right, Rick Ducat, thank you for that. And thank you, Don Kaufman. I'll give you the final word here today.
Yeah, coming into the end of the year and obviously the beginning of next year, look to sell tech. We are trading right now in the nosebleed section of tech, and I'm going to be looking to sell it outside of maybe Tesla. Again, sell side activity throughout the broader and bigger of the market caps.
That's a good final thought. Don Kaufman and Rick Ducat, thank you both so much for being here.